Hello, everyone. I'm Arnie Monson, president and owner of Holtmeyer Monson. We are the largest lender service provider in the country, and I would like to share some ideas with you and thoughts this afternoon about how your institution can take advantage of government guaranteed lending and provide a valuable resource to your small business borrowing clients. A little bit about us. This year, we're celebrating our 40th year in business, and that's a long time to be operating a small business. We're also celebrating 16 years as a preferred service provider endorsed by the ICBA, the Independent Community Bankers of America. That's a very valuable relationship that we've enjoyed for all these years, and it has been truly a labor of love. So that's a little bit about us. We want to talk to you today about how community lenders can take advantage of government guaranteed loan programs offered by the Small Business Administration, the SBA, and the U.S. Department of Agriculture, the USDA. These are great tools for community lenders. We're in an environment right now where small business borrowers are stressed. We've come out of a pandemic, and that has eroded some capital for small business operations. And now we're in a period of rising interest rates, which puts further stress on borrowers and cash flow. And there are ways to provide some relief to these borrowers outside of your conventional credit box. We're going to talk about that in a little more detail. So these programs do provide access to capital, which is very critical nowadays, of course, ongoing for the small businesses. And how can we as an industry continue to provide funding to these small business borrowers in a prudent manner and make good credit decisions for our institutions? Well, one great way to do that is mitigate the risk involved through the use of a government guaranteed loan. These loan programs offer a full faith and credit government guarantee that accompanies or enhances a commercial credit facility. And these allow you to, as I mentioned earlier, expand your credit box from the existing conventional credit facilities to embrace what we call marginal declines. Now, we're not saying substandard loans. We're saying marginal declines. If you have a borrower that's maybe a little short of equity, maybe short of collateral, hasn't got the business quite stabilized yet, so there's inherently more risk, this is a great tool to allow you to continue to provide credit to the borrower. As we all know, community lenders are relationship lenders. We're Main Street lenders. We are not the big banks, but they, small business borrowers rely on the relationships that they've cultivated with their Main Street banker for access to capital and a whole range of other services. So this use of these guaranteed loan programs enhances your ability to serve your customers. We all know we're in very competitive times. There's lots of competition for community banks. There's the big national banks, there's regional banks, there's your local, dare I say, credit unions that are trying to get into the commercial lending business, fintech lenders. So in your local markets, in your footprint, you're seeing ever more competition. If you're not offering a full range of services, you're not competing effectively, and we can help you with that. SBA and USDA lending can be very profitable also. Most community banks that we work with are looking for sources of non-interest fee income. Well, there's a very active and a very lucrative secondary market that exists for the guaranteed portion of these government guaranteed loans, SBA and USDA loans. We'll talk about that a little more in detail. But you can sell the guarantees at a significant premium, generate some premium income as well as some trailing servicing income. So these are great tools. And again, if you're not in this business, certainly your competitors are, and you'll want to be sure that you can compete effectively. A little bit more about us, Holtmeyer Monson. As I mentioned, we're the largest lender service provider in the country. Our business model is very straightforward, very easy to understand. We serve as a community bank's outsourced, fully staffed, pretty high level SBA and USDA government guaranteed lending program. Again, we've been at it since 1982. So whether you're an existing government guaranteed lender that maybe is looking to expand, maybe you've had some staff turnover and now you need to consider outsourcing your function, or if you're new to the industry, maybe restarting after the pandemic or some other economic considerations, we'd be delighted to help you with that. We can handle all aspects of the government guaranteed lending process, including sale of guarantees. And of course, enhance and embellish the relationship that you have with your borrowers and your customers. We operate with the SBA under a very straightforward lender service provider agreement that all qualified lender service providers engage in. We have hundreds of them in place right now. And one of the key aspects of why you'd consider outsourcing these services is to, first of all, control overhead and bring that level of expertise to your organization without having to take on people costs. This is really specialty lending, so it's outside of your standard conventional C&I lending, and it requires some expertise and a strict adherence to the standard operating procedures and the regulations of the agencies. So our typical client on an annual basis completes about 8 or 10 SBA or USDA transactions. Well, you certainly can't cost justify staffing up a department, taking on a bunch of overhead, investing in software and processes, as well as the regulatory costs for that amount of limited volume. So outsourcing is the logical solution to that problem. Presently, we're serving more than 400 clients. We operate on a nationwide basis. We're based in Memphis, Tennessee. We also manage bank guaranteed loan portfolios, SBA and USDA loan portfolios. And by managing, I mean payment processing, all the service work, required compliance issues, audits. And as of this morning, we're managing about $3.5 billion of SBA and USDA loans for our clients. So you can get yourself, you can make available to you a very turnkey, high-level, interactive SBA department, USDA department on an outsourced basis. We are very interactive with all of our clients. When we engage a client and take on a new relationship, we assign an account executive to each account, so you have a go-to person that you can call and get good, responsible service. A few of the highlights of the guaranteed loan programs that we've been talking about here, the two agencies we get involved with are the SBA, Small Business Administration, and the USDA, Department of Agriculture. The most widely known, the most well-known, the most widely used program at the SBA is the 7A program. That's the guaranteed loan program. So you at the bank level would identify a creditworthy borrower that's looking for a term credit facility, a term commercial loan. And you could make application, and upon that loan, get a 75 to 85% full faith and credit, the government guarantee. These loans up to $150,000 carry an 85% guarantee. From $150,000 up to $5 million carry a 75% guarantee. Those guarantees, by the way, are exempt from your lending limits and from your reserve requirements. So it's a very good leveraging of the bank balance sheet. A sub-program of the 7A program is the SBA Express program. This is a smaller program, $500,000 maximum gross loan amount, carries a reduced guarantee, 50%, rather than the 75 or 85%. And the bank gets what's called delegated authority to operate this program. So the bank has underwriting authority, and they do the credit underwriting. SBA does not credit underwrite these SBA Express program transactions. That's at the bank level. As they say in the industry, you hold the pen. Now, one of the key differences here and key advantages to this program is that it can be used for a revolving line of credit, whereas the 7A program is strictly for term amortizing debt. This can be used, and we use it widely in our practice, as a companion line of credit to a term credit facility. Oftentimes borrowers need a revolving working capital line of credit in addition to their term financing. This can be a companion to that. The USDA B&I, Business and Industry Program, is a shared risk program, much like the 7A program. The bank makes application and gets a full faith and credit guarantee on their conventional or their commercial credit facility, 80% guarantee across the board. This has a larger maximum gross loan amount, $25 million versus the aforementioned $5 million. And this can be used in addition to SBA eligibility. So if you have a borrower that may have used up all of their SBA eligibility, they still have the ability to go to the USDA and get up to a $25 million loan for a commercial purpose. A couple key differences also, the USDA allows nonprofit borrowers to take advantage of this program, whereas with the SBA, the borrower would have to be for profit. We use this a lot in our practice, and we operate nationwide. So we have a lot of small bank clients in small cities across the country, widely used for agricultural facilities, grain handling, chicken production, hog production, as well as co-ops. And it can be used for more standard business uses too. It can be used for hospitality, hotels, motels, refinancing debt, business expansions. We've recently completed a project for an industrial park in a small town under the Community Facilities Program under the SBA guideline or USDA guideline. So those are some of the programs that we get involved with. And at your bank level, you have borrowers that are probably good applicants for this kind of financing. How do we work together? As I mentioned earlier, we are very, very interactive. We've been at this a good long time, so we've refined our processes to the point where we can make a real streamlined and interactive delivery system. Getting started, when we enter into an agreement with a client and sign that LSP agreement, we will come on site. Most times, sometimes we do it virtually, but most times we like to come on site to your location, do some staff training, talk about best practices, some of the procedures we use, identify key contacts, provide some marketing ideas about how you can promote this type of lending in your institution. And what are some of the benefits? Obviously, if your competitors are making a certain class of loans and you're not, that puts you at a competitive disadvantage. So make more loans in your footprint, maintain those borrower relationships. That commercial credit facility is kind of the centerpiece of a lot of other relationships with the borrower. Personal accounts, trust work, some other insurances maybe. Every community bank that we work with around the country is looking for sources of non-interest fee income. We're in a interest rate compression market. Rates are going up, so it's even more important to try to generate non-interest fee income. Selling those USDA and SBA guarantees is a great way to do that. Gain competitive advantage or stay competitive. Again, I am confident that wherever you are in the country, there are lenders making government guaranteed loans. We talk about cost structure. All of our fees are transaction based. So when we say we operate and you can take advantage of our services without the overhead, we really do mean that. All of our fees are transaction based. Our largest clients typically do 100 transactions a year. Our smallest clients might do one every 2 or 3 years. So size is not a requirement. We don't have any minimums. We don't have any upfront fees. We don't have any continuing fees. You do X number of transactions. We assess our fees based on that number of transactions. In summary, I would say if you're not in the government guaranteed lending business, you should be. If you'd like to be and you don't quite know how to do it, or maybe you've come through the pandemic and you got involved with some PPP lending, and that was successful for you, we can help you with that if you have some forgiveness issues. Or now, after you're through the PPP phenomenon, maybe you're thinking we should really be in this on a full-time basis, in the government guaranteed SBA and USD basis. So please do give us a call. We're happy to assist you. We are a value-added agent. We've enjoyed the ICBA relationship for, as I mentioned, 16 years. We'd be delighted to have a conversation with you and show you how we can be a valuable resource for your community bank. Thank you all and have a great day.